evening, everyone. Today, me, along with my team members, will discuss how US tariff policies affect South Korea. So, South Korea is a highly export dependent economy, and the United States is one of its key trading partners. It exports major goods such as automobiles, steel, semiconductors, and electronics. As a result, US trade policy has a direct impact on its economy and competitiveness. Now, what are tariffs? Tariffs are taxes imposed on imported goods. Governments mainly use them to protect domestic industries and reduce foreign competition. The United States imposed tariffs on South Korea under Section 232 trade policies, included 25% tariffs on automobiles and auto parts, and up to 50% on steel and aluminium. Although some tariffs were later reduced after negotiations, these policies still increase the cost of Korean exports and reduce their competitiveness in the US market. Several industries were heavily affected, especially automobile companies like Hyundai and Kia, steel producers such as POSCO and Hyundai Steel, and technology companies including Samsung and SK Hynix. Overall, these tariffs increased cost, reduced profits, and created uncertainty for key stakeholders such as firms, workers, governments, and investors. Despite these challenges, South Korea and the United States continue to maintain a strong trade relationship under the Chorus Free Trade Agreement, even though trade tensions have increased between the two countries. Now, I would like Chen to continue.
Thank you. US tariffs not only increase trade costs for South Korean firms, but also accelerate major changes in global trade patterns and supply chain decisions. In the early stages of the trade conflicts, South Korea exports to China declined sharply, particularly in manufacturing and technology-related sectors, such as semiconductor and IT industries. As tariff uncertainty increased, firms forced growing pressure to restructure supply chains and diversify regional markets. As a result, tariffs accelerate broader structural changes across regional supply chains. Beyond short-term export disruptions, tariffs also accelerate major changes in regional trade and supply chain strategies. Initially, South Korea remained heavily dependent on major export markets such as the United States and China. However, tariff uncertainty exposed the risk of concentrated trade dependence. As a result, many Korean firms gradually expanded toward Asian markets and diversified regional sourcing and production strategies. However, operating across multiple jurisdictions also increased financial, legal, and investment capacity for multinational firms. Although tariffs initially disrupt Korean trade flows and increase export uncertainty, Korean firms gradually adapt through supply chain restructuring and regional diversification. Over time, Korean exports to the US recover significantly. These strategies also create important financial implications. I will now hand over to Senro to discuss the IFN implications.
Let's look at the IMF implications. US tariffs resulted in investors and lenders increasing borrowing costs because of increased risk. The cost of capital rose, making it more expensive for businesses to invest and grow. Tariffs also increased foreign exchange risk. Companies like Hyundai earned revenue in US dollars but pay costs in Korean won. When exports earnings fall and currencies fluctuate, profit margins come under pressure. Large firms can reduce their risk through hedging, but many smaller suppliers cannot. The investment side follows a logical sequence. Tariffs hit first, then the numbers stop working. Projects are delayed, reconsidered, or cancelled due to higher tariffs and reduced expected returns. That's what real options theory is about. Keeping your options open when things are uncertain. Some companies responded strategically. For instance, Hyundai built production facilities in the US to avoid tariffs. This graph shows exports dip around 2019 and 2020. That's when firms were sitting on excess inventory and cash was tied up. The market strategy response is a portfolio theory applied to countries instead of stocks. Don't put everything in one market. South Korea spread its exports shown on the pie chart. They are not dependent on one or a few countries. Overall, South Korea's response reflects key finance principles like managing risk through diversification, investment flexibility, and strategic restructuring. However, these adjustments come at a cost. especially for smaller firms and workers affected by industry changes. That's not just a finance problem, that's a fairness problem. And that's exactly what my teammate Hari will pick up in step 4.
Hello everyone, my name is Harish and I'll be talking about the equity analysis. So, who bears the burden of US tariff? So this slide evaluates the fairness of US tariff on South Korea from three perspectives. First, from a denological perspective, the tariff raises concern both South Korea, a rule-based trading partner, while the tariffs were imposed unilaterally, creating an uneven application of trade routes. Second, from an unilateral perspective, the economic cost outweighs the benefit for South Korea. OECD estimates suggest export revenue losses of approximately 8.9 billion annually. Third, from a structural perspective, the burden falls disproportionately on South Korea's workers and SMEs, which have less capable to absorb shocks compared to larger multinational firms. Moving forward, our analysis highlights three key priorities. First, pursues the policy solutions through World Trade Mechanism, and the second one is through strengthened financial resilience by expanding currency hedging and export credit support. Third, ensures equity and social protection through worker transition programs and support for SEM. By combining these three strategies, policy, financial, and ethical, South Korea can reduce vulnerability, protect affected industries, and build a more resilient economy in an increasingly uncertain global trade environment. Thank you. So these are the reference listed that we've used for this assignment. Thank you.